Hey guys, in this video I'm going to explain how to use a supply and demand trading strategy properly to further increase your profits and dramatically lower your losses. So without further ado, let's get started. First and foremost, the basic philosophy of supply and demand is simple. Demand equals buyers and supply equals sellers. The higher the demand, the bigger the buys, and the lower the demand, the smaller the buys. This concept applies to anything in life, one of which is trading in the stock market. So as a day trader or even swing trader, your goal is to buy at a demand zone where other big institutions are buying and sell at a supply zone where they are selling. You want to follow these big institutions because they're the ones moving the market, not retail traders like you and I. So how exactly do you find these zones and correctly draw them on the chart in order to increase your probability of a successful trade? We're going to focus on two things. One is the level 2, the other, and more importantly, is the support and resistance. The level 2 is a tool many traders use to determine the price on the bid and the ask. The bid price is the price the next buyer is willing to pay for a stock, and the ask price is the price the next seller is willing to sell the stock. So if there is an excess number of supplies, you'll see there will be a lot of shares on the asking price. This is an implication of a possible bearish move. And if there is an excess number of demand, you'll see there will be a lot of shares on the bidding price. This is an implication of a possible bullish move. But the level 2 is something traders constantly watch out for to see if a large number of shares at a certain ask price is decreasing. This means buyers are buying up that ask price and therefore a potential bullish move may be forming. Vice versa, if a large number of shares at a certain bid price is decreasing, this means sellers are selling out that bid price and therefore a potential bearish move may be forming. These signs lead to breakouts or breakdowns from a support or resistance level, which we'll talk about in a second. Typically though, when you see a lot of shares at a specific bid price that is not decreasing, that is a possible demand zone to buy a stock. And when you see a lot of shares at a specific ask price that is not decreasing, that is a possible supply zone to sell that stock. Another thing to watch out for is that not all the data will account for every buy or sell order publicly. A lot of times, buyers or sellers could choose to hide their orders on the level 2, which can deceive what truly is a demand or supply zone, especially if it's a big buyer or seller hiding their order. That's why the level 2 is not the complete picture. This is where support and resistance comes in to truly determine if you have a good probability trade on hand. Support and resistance zones are price levels in which a stock struggles to break through those specific price levels. A support zone is an area which the current price level holds the stock up, whereas a resistance zone is an area in which the current price pushes the stock down. When you're talking about either case, if a stock bounces off these zones 2 to 3 times, that zone's reliability increases further due to multiple validations. The more it comes back to test these levels, the stronger the validation that these are true support and resistance zones. However, eventually a stock will break through its support resistance level when it tests those levels enough times and there's enough volume to push it through. There are just certain candlestick patterns you need to watch out for in order to anticipate that move, like higher highs and higher lows for breakouts, or lower lows and lower highs for breakdowns, which we'll talk about in another video. Using these support and resistance zones in conjunction with the activity on the level 2 will really help determine if the stock is bouncing off a support resistance zone or breaking through. When a stock breaks out of its resistance level, that resistance level now becomes new support, so as long as it's not a false breakout. And when a stock breaks down its support level, that support level has now become new resistance. Let's take a look at a live example by running a simulation of a previous trading day. This is PayPal on a 5-minute chart, which is a reliable time frame to depend on true support and resistance zones. And we're going to run a simulation for January 5th, 2022 as if it were actually trading on this day. But before we run the simulation, we're going to use the prior trading days to map out key support and resistance zones. So let's go all the way back to the last day of the last year. That would give us 3 trading days, which would give us sufficient candlesticks on the 5-minute chart to truly determine what is a validated level of support and what is a validated level of resistance. So immediately, I see this 190 price level acting as a validated level of support, because not only did it bounce here on this trading day, it bounced another 3 times on the next trading day. 1, 2, 3. In addition to all that, when the 190 support was broken, it acted as resistance when it tested the price level right here. And what happens when support gets broken? It becomes resistance. But ultimately, the stock opened higher the next day, well above the 190 price level. And when it did come down, it acted as support. If we go back to the previous trading day, when the 190 price level did get broken, what was the next validated level of support the stock was bouncing off of? It was around 185.85. Bounce here and bounce here. So let's draw out a support line right here. So with the support around the 190 level and support around this 185.85 level, this to me has become a support zone. So I'm going to quickly fill out this box and extend it all the way to our current trading day that we will simulate. And as you can see displayed beautifully, if we extend it out again, these levels act as a good support zone on all 3 previous days. It bounced here before ultimately running up. It came back to retest the top portion of the support zone before running back up. We go to the next day and you can see there are multiple times the stock bounced within the support zone. Although it wasn't pitch perfect here, it eventually regained steam and bounced to this 191 level, came back to retest multiple times, and then eventually went on a bullish run. So we know we have a reliable support zone to use for our current trading day. Obviously nothing is ever guaranteed in the stock market, but you use these tools to your advantage to increase your probability of a successful trade. Now before we run the simulation, let's try to map out a reliable resistance zone. If we go back to this trading day again, where the stock bounced off the support zone 3 times, it ran into this resistance at the 192.80 level. Pulled back a little, and then eventually broke out before it ran into resistance again at this 194.30 level. You can see it comes back to retest previous support because once resistance gets broken, it becomes support. And it retests the new support successfully multiple times before breaking out again. So this area has become our resistance zone. So let's go ahead and fill it in and extend to the current trading day we're going to simulate. You can see on this day it was above this zone during the opening bell, but it failed to act as a validated level of a support zone after testing it a couple of times and ultimately breaking down. So this one support zone has now become a resistance zone. So our goal would be to buy around this area and sell around this area. So without any more delays, let's go ahead and run the simulation. Okay, we can see the first 5-minute candlestick tested the very end of this support zone, and there was clearly a big reaction there which validates it as a good level of support. I will look to take a trade on the next candlestick by going long and having my stop loss set at the low of the first candlestick while looking to take profit around this resistance zone. Okay, this is generally where I would be taking profit if I was in this trade. Remember, use the level 2 to your advantage and closely observe the bid and the ask. You can see right here there's a 16,000 share seller at the 194 area, followed by a 2,400 and a 2,300 seller. So this is going to be a heavy area of resistance, and it correlates with the fact that we're nearing the top of our resistance zone. See? It rejects the 194 level a couple of times, briefly breaks through it, and ultimately gets rejected. Clearly a reaction there. So maybe if you wanted to go short, this would be the place to do it on the next candlestick, and your stop would be the top of this candle right here. You can see we came back a couple of times to retest the beginning part of this resistance zone and got rejected twice. The stock once again bounced off the support zone, but it wasn't able to complete the move again, which indicates bearish sentiment. The stock eventually goes down further into the support zone and retests the bottom end once more before eventually breaking down at market close. But certainly the heaviest part of trading is the first hour of the market, and there was definitely an opportunity to take a trade or two here. This is one of many scenarios in trading that signifies how powerful proper support and resistance can be. That'll do it for this video. I sincerely hope you found it helpful and informative. If so, all I ask is for you to hit the like button below. It really helps out the video and more importantly this channel. If you'd like to see more content like this going forward, please consider subscribing. And with that, I wish you guys nothing but the best in the markets, and we'll hopefully see you soon in another video. Have a wonderful day.